We have the last session for the day. May I request the panelists and the moderators to please come on stage. Once again, please request everyone to settle down with their coffees and tea. May I please request the panelists and the moderator to take their seats on the dais. All right, we have the last session for the day, and we have the moderator, Mr. Prashantho Roy, who will be moderating the session. May I please request everyone to take their seats, and if you would like to please move ahead to the front rows. Thank you.
Okay, thanks very much, and welcome. We have a session on identity and authentication, and it's somebody in the morning said something about the elephant in the room being Aadhaar. Well, that elephant remains, and we are down to, I think, the home turf of that elephant: identity and authentication. We've clearly seen and we've heard that identity and authentication are very central. They're kind of the fabric of a digital economy. And clearly a lot has happened in terms of progress. The Aadhaar-based system, the authentication for reasons of government benefits, government to citizen transfers, direct benefits, where, famously 70-80% of a benefit would leak along the way, and where the DBT is being transferred fully to the end customer. Allegedly, 100% of it is going. I mean, of course, where it is going to that person, 100% is going. There have been issues with Aadhaar, being a single point of failure, with, people being denied their identity, as it were, or their identity fails for whatever reason, and therefore they're denied a set of benefits. So that's a set of issues. We've seen identity and authentication, both the Aadhaar system and a few others around it, being used fairly effectively in fintech, in a whole lot of financial inclusion initiatives. So there is, of course, the Pradhan Mantri Jan Dhan Yojana PMJDY bank accounts, which I think some 300 million or something bank accounts, which have been very rapidly onboarded and set up. We know that, Jio, for example, was one operator which exclusively used Aadhaar-based eKYC to go from 0 to 280 million customers in, a little under 3 years. Okay, we had the PPIs, the wallets, mobile wallets, Paytm, most of all, after demonetization, where it went from its, that time to 20-30 million. To some 200 plus million customers, exceeding what, say, the State Bank of India got in terms of numbers of customers in over 100 years. And a lot of that was based on very quick, easy electronic authentication. If you had followed the old system of going in and getting, signatures from people and a document and, notarized, self-attested document or whatever, you'd not be able to do that in 10 or 15 years. What was done in maybe 9 months or a year in terms of onboarding people onto digital payments. So we are clearly in a debate which, it's a very significant debate without, very clear, strong sides emerging very easily. You need identity and authentication. There's clear, strong benefits to it. There are huge challenges with having a system which is a single point of failure. We are often compared, the Aadhaar is often compared to the social security number system in the US. That itself is coming up with challenges where itself, that too is being used for things like, insurance and, validation for things that it wasn't intended for. And people are beginning to question that. So I think what I'd like to do is just ask the panelists here for very quick initial comments on where do they see where we are in identity and authentication, what's up ahead, what's the way forward, any idea of what works well in terms of maybe best practices or global best practices, and whether some of the things that we have gone through and maybe they've fallen by the wayside or they've been abandoned. For example, I mentioned the PPIs and wallets, and Weber, when we come to you, we could touch upon this, that they really ramped up based on simply using phone numbers as identity. Okay, if that was so easy, and assuming that the mobile phone number is some sort of basic identity where you can have limited KYC or zero KYC and get to an account and very quickly ramp up, then why is that not a good enough system? And which has kind of fallen by the wayside with aggressive extended authentication. So what I'd do is maybe, Apar, can I ask you for your initial comments for maybe 3-4 minutes, 5 minutes maximum, and Weber and then the others.
Good afternoon, everyone. It's a pleasure to be here. Just a disclosure of bias. I was a litigator in the Aadhaar litigations for the sides of the petitioner. And thereafter, I have assumed a role at the Internet Freedom Foundation, and our organizational position is that Aadhaar, in its present form, does technically, as well as legally, does negatively impact privacy. So with this bias, let it not hang as a cloud, because I now hope to make my comments a bit more objective as well. Given that most people don't read the terms and services, I would also like you to just click I agree now. Going a bit further, going a bit forward, I completely agree with the articulation that identity as well as authentication is a primary need in several functions. I think that flows out of the Sustainable Development Goals of the United Nations as well, and how a lack of identity in fact puts a large number of people from being formally incorporated both within the ambit of financial services as well as state subsidies and benefits. And this is where Aadhaar comes in, because it does at least have its stated objective towards provisioning them. Now, what then does become problematic are several features of that program with regard to accountability, redress, as well as the basis of authentication itself being biometric. It also results in what is called universalization, in which a single digital ID is then used across services, both private as well as public, and then can give a very deep insight into the daily activities of a person. It's not always when you only transact with your bank that you will use your Aadhaar, or it will be logged as a ledger entry against your Aadhaar entry. It may be just casually walking down a street in which a CCD camera does capture your biometrics, and that level of technology and sophistication is being deployed today in a lot of parts of the world. So a lot of this conversation, in my view, and then again, as my bias as a lawyer, starts from what has been a core deficiency in Indian policy making, where we have seen not Aadhaar, but data protection as the elephant in the room. In fact, it's the elephant which we should garland as the Indian elephant, finally, in 2019. I think this is an elephant we should welcome. This is our friend. Because we have not looked at data protection as something which furthers user trust. It is something which puts in guardrails, and that's why a lot of our policy making has been episodic, has been with the fear that what will be the impact of such a law on industry itself, how will it impact growth and economy. But on the flip side, there will be a lack of user trust. And what do we see today? It's actually a level of indeterminacy in regulations which have come through a level of ad hocism. What is ad hocism and what are the costs, I think, can be dealt by different panelists. And this is not to doubt the intentions of any regulator or any government. It's just come through over the course of time. When the Justice A.P. Shah committee was set up under the Planning Commission, he comes out with a report and says there's a need for a comprehensive data protection law in India. This is in 2009-10. Thereafter, what happens? Aadhaar is also rolling across at the same point in time. What happens subsequently is that the government does draft a Privacy Act, but it's not tabled into Parliament. And thereafter, you do have a National Identification Act which is introduced, but is then subsequently not passed by a House. It's referred to a Standing Committee of Parliament. You don't have a law, you don't have statutory backing. What happens subsequently is that when the court challenges are filed and are then rolling ahead, you have a money bill come in which reduces the power, scope, and authority of the Rajya Sabha to comment on an act of legislation which is an ordinary piece of legislation. And yes, constitutional judgments may say that it was a money bill, but this is something which should also be referred to parliamentary experts who often say it had core features of not being a money bill. What happens then? Then it gets challenged again in court. And one provision, which is Section 57, which permits the sharing of Aadhaar data with private companies and using it through contracts, gets struck down. What do we have today? We have an ordinance. And ordinances, then again, by their very nature, are only stopgap measures which ride us through emergencies. What we have is a lack of determinacy, which has come through because of a clear positive action on data protection and dealing with safeguards, incorporating them within the conversation from the very start, as opposed to approaching a singular mission to extend the adoption of Aadhaar. I think both can be done together.
Terrific. I think that's a lot of interesting points you touched on. The ordinance, of course, was particularly fascinating, and it does mean that the Aadhaar Amendment Act will come back into Parliament probably in June. And maybe toward the end, I'll ask you to try and predict what you think will happen with that and in what form it will be. But as you mentioned, the elephant in the room, the Data Protection Act, there are quite a few elephants in the room, but they're all centering around data now. And, as we read everywhere, data is the new oil, and we've gotten quite sick of data being the new oil. But, it is what it is. So, Vaibhav, let me come to you. Vaibhav is partner, LNL Partner Law Offices. I'd like you to maybe just a couple of lines of introduction as Apar did, and then go on with the other aspect of what I mentioned.
Sure. Thanks, Prashanto. Good afternoon, everyone. It's a pleasure being here. I'll also disclose my bias. Being a corporate commercial lawyer, I have represented a number of large fintech companies in setting up their operations in this country. And when I look at this whole issue of privacy, authentication, my perspective is from the industry. What is the industry facing as a challenge? And so therefore, with that disclosure of bias, let me give you my perspective. At the moment, if I was a CEO of a fintech company, I'd pretty much be pulling my hair apart. There's confusion galore, almost to a point of ridiculousness. And I mince no words when I say this. You look at last 2 years, policy after policy, there is no thought process. There's just disruption for the sake of disruption. You look at what happened. You came up with demonetization. Your whole play was thereafter digitization of the economy, going for wallets. You start seeing growth in the wallet industry, as Prashanta was mentioning. Suddenly, all the banks start getting nervous that they are eating up into the business of the banks. So all the banks gang up together, and you have this whole UPI framework that sort of gets put into place. Suddenly, the wallet industry that was growing on the back of easy norms was actually got significantly disrupted when the RBI came up with new guidelines for particularly the wallet industry. Now look at the other issue. You also have the issue that each time disruption happens, the impact that it has across industries isn't thought through. Now, my perspective is that you're looking at the economy, if you need for the economy to grow, if you want access of credit to the poor people, to actually make sure that the marginalized part of the section of the society that is still not getting banked also becomes part of the mainstream, you need to use internet to your advantage. And if you're looking at avowed objectives, as the finance minister mentioned in his speech, of a $10 trillion economy, you actually need to use internet as your friend. You need industry to work together, address the concerns of privacy, but work hand in hand to also ensure that the rollout of credit, the ability, the access for the public at large is given. Now, what did you do? You allowed the wallet industry to mushroom. As you mentioned, the largest bank in this country had not got that kind of a customer base, which wallet industry started to get in 6 months' time. And the moment that happens, the RBI clamps down on the wallet industry and says, do a mandatory KYC. That has been pretty much a death knell on the entire wallet industry. You're looking at serious money that's come into this business, and that was serving a utility, right? We were seeing wallets not only being used by us, but even people out on the street, footpath dwellers, shopkeepers. Wallet was becoming an enabling tool for commerce even in that context. But suddenly you had a disruption there. Look at what the framework of RBI is. RBI guidelines on KYC at the moment provide that if you are doing business with a customer which is more than 50,000 rupees, in certain cases up to 1 lakh, you have to do customer-facing KYC. Now, internationally, it's not just a case of India. Customer-facing KYC has a huge cost attached to it and can take sometimes even up to 25 to 30 days. This is a global standard I'm talking, not talking about India. Customer-facing KYC. Now, the need of the hour was that if you're talking of digital India, you're talking of growth, you're talking of digitization, you needed to enable authentication to be done through different alternatives. Now, Aadhaar has compounded confusion galore, because what's also happened is that the RBI guidelines said anything other than above 50,000 rupees, which is not even $1,000, you needed to do either face-to-face authentication or Aadhaar-based e-KYC authentication. Now, after the Aadhaar verdict that Apar mentioned, what has happened? The Aadhaar verdict of the Supreme Court says private parties cannot access Aadhaar for the purposes of e-KYC verification. Subsequently, now there is an ordinance that has come out. Now, what form that ordinance will continue, that ordinance, as Apar very rightly mentioned, has a number of question marks. The validity of it, how long will it last, when it comes back in its new form as a bill, what will be the constitution of the parties in the upper house and the lower house, what kind of thought process they will have, what does the industry do? The RBI in its own KYC guidelines had said, our guidelines are subject to the outcome of what the Supreme Court says in Aadhaar. Now, at the moment, frankly speaking, the entire fintech industry doesn't know what it should do so far as authentication is concerned. Aadhaar ordinance has brought in a concept of offline verification of Aadhaar, which means that biometrics was a huge point of concern in the Supreme Court. So therefore, the government came up with this construct that we will allow offline verification. So offline verification means you shouldn't know what the Aadhaar, you shouldn't be able to tag the Aadhaar number on the system. But as long as you see that Aadhaar is working out, somebody has an Aadhaar card, that should be good enough. Now, if that is the case, then why not a PAN card? Why not a driving license? And so therefore, are we abandoning Aadhaar going forward? What happens to the billions of dollars that have already been spent on Aadhaar as a mode of authentication? My limited point is, I think privacy is an absolute valid concern. We must look at privacy very carefully. But we are talking in a country where identity of individuals is in question. people don't have an identity. Take that into context, look at the fact that the economy and the growth has not reached that far, come up with a balanced way that the industry can be a partner with you in growth and not make it your rival, not make it your competitor in a way that there is no win-win for all. That be my opening thought here.
Great, thanks a lot, Vaibhav. Smita, can I come to you for your opening comments? And Smita Krishna Prasad, she's with the National Law University. I'll leave it to you for a little more depth of introduction.
Thanks, Prashanto. I'm Smita. I work with the Center for Communication Governance at the National Law University here in Delhi. And we're a research center that focuses on different aspects of civil liberties and cybersecurity online. And one of the things that we work on quite a bit is the right to privacy, and in that context, issues like Aadhaar, and as well as digital identification. So just taking off from what the other panelists have already said, while I do agree that Aadhaar and the fintech industry are important aspects of discussion when we talk about identification and authentication online, but I also wanted to point out that it's not necessarily limited to that. Especially given the scope of what we call the digital economy today, right? So while Aadhaar is very important, we need to also consider the fact that so many other services are talking about identification in a digital form, whether and some of this can be problematic for some people, and some of it is great as well, right? So we talk about for instance, if you talk about like healthcare services being provided, and if people are taking, online, and if you're talking about marginalized communities, that people may or may not want to divulge their full identity, considering the societal norms in India. At the same time, you have talk about social media platforms, trying to verify identity, ranging from just real name requirements to actual eKYC requirements that may potentially be imposed by the government, for instance, given how much discussion has happened around the need for more liability in that context because of issues like misinformation causing violence. And then you have very simple things like your local gym is going to take your ID based on your a thumbprint on their iPad or tablet. So all of this constitutes identity or authentication of identity in the digital economy. And in this context, I think it's very important to think about the right to privacy, and because it not only impacts your data protection, but also your freedom to choose the services that you're going to use, as well as the way you're going to interact with your society, right? Whether it's your friends and family, whether it's corporate service providers, whether it's the government, whoever it is. And so we need something that allows us to trust each other in the context of a privacy law, and allows us to, and also regulates the way, regulates the way these interactions work. And I think here, I wanted to point out that there's a couple of different important considerations that we'd have. One, of course, would be the choice and the freedom to use different services depending upon how they treat our identity, how they treat our data. But also the other issues that we've seen with Aadhaar, for instance, or a data protection law, one of the important things being law enforcement requirements and how law enforcement can access our identity or data. And on the flip side of that, unwarranted surveillance and issues with India not really having a law that addresses that the kind of surveillance that we are seeing today. And I think now, if we see policy making the way Apar was talking about, the big things that have happened in policy making today, and right now we are seeing digital economy itself appearing as a fourth component of this privacy or data-related lawmaking or policy making. And I think one of the questions that I have in this context is whether that is in itself a valid enough concern. So when we have Indian government talking about data being a national asset in our e-commerce policies, for instance, or talking about the use of data for public goods in ways that are not necessarily defined well and articulated well, the question then becomes whether just growth of the digital economy without taking into consideration your rights otherwise is something that is a valid feature that should be considered in these conversations. So I'll just stop there and maybe we can discuss.
Okay, thanks. Some great points there. Just one point, you mentioned the choice of different systems, and you would apply that also to beneficiaries of government benefits essentially, because that is the one place where the government has kept them narrowed down to one straitjacketed system.
Yeah, so I mean,
and for the others, there is choice in some ways. Not for, I think for my income tax filing, I still need to link my Aadhaar.
yes,
But
that's true.
for most other things, I have choice, but not if I'm a beneficiary of DBT.
I agree that that's a problematic thing, and we have to figure out what the best way to do that is. And there is obviously a lot of criticism about Aadhaar not necessarily being the best way to do it in the current form of Aadhaar, at least. And so, I mean, I think choice would be more probably be more related to the private sector than these kind of like mandatory requirements. But at the same time, to the extent that it is feasible, I think choice should be available.
Yeah. I mean, especially for example, if there's biometric failure,
yeah.
You need backup. Riju, so Riju Rai is Chief Business Officer with IDFI, and I'd leave you to briefly introduce what IDFI is and your thoughts on where this is going. You need to just press that.
Technology. So my name is Riju Rai. I am the Chief Business Officer of IDFI. I have 3 lawyers here, my co-panelists, so I am not a lawyer. I'm going to take the perspective of the industry here. And also, I feel a bit sympathetic towards RBI, so I'm going to talk about RBI as well, because I think they've been bad-mouthed a lot. Not the government, though. That is fine. So let me start with some of the basics of the theme today, which is identity and authentication. Because what we are trying to do here is establish the identity of the person, and know that this person is the same person that he claims to be, so that you can then give them some sort of financial service, or even a non-financial service for that matter, right? And this means that, as Apar has argued in his, in his landmark case, that there is no need to really rely on on one single Aadhaar card as the only way to identify a person, because for years and years, the banking industry has itself blossomed, mutual funds have blossomed, and Aadhaar was really not there, and people managed, right? So, but there are certain basic principles that we need to remember, that it has to be ubiquitous. Everybody needs to be able to identify themselves. They shouldn't be excluded, which means that every regulation that talks about identification seems to go back to OVDs, officially valid documents, government ID cards, that everybody has, okay, of which Aadhaar has now become, finally, it's being called an OVD as well by the Aadhaar Amendment Act. And the problem, I think, started when people started making it mandatory under something known as the PMLA, Prevention of Money Laundering Act, okay, which said, go link your Aadhaar to different things, right? And this is one of the things that the judgment actually struck down, right? So you have to identify the person, you have the ID card with you. And the way the regulator would do it is they would say, look at the person's ID card and do an original seen and verified. So look at the card, does it look original? It did not require you to go to any database or anything. And they would match it against the person's face. And the human being, by the way, is very inaccurate in matching faces. And then they would say, all right, we have in person verified this person. This is how we've done historically, right? Now, this sort of mechanism of doing it, as was pointed out by Vaibhav, is actually has a few issues with it. First issue is, if you've got a lot of fintechs and PPIs trying to, open the barriers of finance out to the underprivileged, give them, include them into the economy, you can't do this kind of, a service. And the assumption here is Aadhaar is the only way to do it.
Correct.
And actually, I want to challenge that assumption.
Absolutely.
I don't think that we need to close our imagination. We have these sort of blockers that Aadhaar is the only way to do it. You can actually identify the person, if you see his ID card and authenticate him against databases today without requiring any point of presence.
Correct.
Identify him correctly. You can know that he's the same person with the smartphone, because smartphones are everywhere, right? There are around 300 million smartphones right now. And you can use that to find out if this person is the same person or not, with a lot of accuracy, better than the human being matching faces. And that's the first point I'd like to make, which is, look, we are just constrained by our own imaginations right now. There's a lot more we can do in terms of identifying this person, right? The second important point is, there's this point Weber made about how the PPIs have borne the brunt of the attack, right? So I've actually done a lot of lobbying as part of Payment Council of India with RBI. And I kind of understand the way RBI is thinking about it. And I feel that the genesis of their problem is with again, the anti-money laundering aspects. They're thinking that, okay, so the bank accounts, you put your cash in, you want to find out where the cash came from, which is why you do the KYC, right? Why would you not do the same thing with wallets? After all, we want to have interoperability at some point. So there's got to be a point where we need to identify this person accurately so that you know where the source of funds is, okay? Again, to solve this problem, we have these blinders. Aadhaar is not necessary to solve that problem. You can profile a person, there's lots of data available to profile the person and to use it to then track him eventually to see if he's got any money laundering aspects at all, right? So, and the RBI's perspective is also that, look, if you talk with them, they're actually thinking about the common man a lot. They're thinking that, okay, the common man, not only do you want to give them services, you want to protect them too. What if you give them loans, and then after that it turns out to be predatory? You kind of go after them. What if a common man is in some sort of a problem or dilemma because his privacy has been attacked? So they are looking at these aspects too. And I think the RBI is trying to take a concerted decision here. If you've seen with conflicting KYC directions from RBI, it's actually because RBI is trying to keep in step with the government. Because the government changed the PMLA and said, go make it mandatory to have Aadhaar, RBI had to follow suit and change its regulations as well. And so they have deliberately said, look, I want to be sure about it. I want to make sure that this is something which is consistent so that I don't have the same amount of volatility that I have already had. So that is why RBI is being so cautious. So sorry about that passionate plea for RBI. I actually I see their side a lot more, having lobbied with them, right? And I think that there needs to be a recognition of that. The cost of authentication is something which they understand as well. So the way to talk with RBI and with the government and to make a plea for it is to say, look, we need to have the underprivileged served as well, and we can do it, and the answer is technology. Let's look at technology as the way out of this problem. Let's also address the issues of consent, and technology can do it, right? And in this way, if you use technology, you might actually be able to solve the cost to serve problem as well. That precisely is my position on this. I'd just like to
Thanks. I'll just come to you. So I think that's a great sum up, and it's also a great defense for the RBI, which I'm glad you did, because the RBI has done some terrific work in regulation in the past, and it's a fairly reasonably independent regulator. Has been in the past. We've seen some shades of that maybe changing a little bit. But I'm just wondering if, if you're seeing the RBI seeing things from the common man's lens, from the, working closely with the payments industry, I have seen the view emerging quite a bit that the RBI is, it's not a view, the RBI is a banking regulator. Okay, it seems to represent the interests of, consumers and the banks. Okay, the NPCI, for example, is held by the banks, and very famously has multiple times said that, we are basically the banks own us, So if that is the case, is that not problematic from even the authentication point of view? Because the banks, there's fairly heavyweight regulation there. Now, if you look at some of the pretty landmark policy documents, for example, the Wattle Committee report was not a statement of policy, but it was a set of guidelines. Now, the Wattle Committee, which included the Reserve Bank of India, said that the payments industry needs light touch regulatory, very light touch regulatory regime. It appreciated the minimal KYC process, which had worked very well. And and keep in mind, this was just after demonetization, and after that we actually saw how great the impact of the minimal KYC thing was. For those who don't know, the minimal KYC, the idea is that your phone number itself is good enough for a certain minimal level of transaction, which for example of wallets would be say 10,000 rupees.
Prashant, just sorry, one more thing.
Yeah.
So it's not just the phone number, it's phone number and a PAN number or any ID number.
No,
not
at
the
that
document.
point, at
These
that
two things.
point, in the initial thing, there was no PAN number. Okay, so what happened was the onboarding of the PPIs
Right.
was simply with the phone number.
Yes.
Phone number, OTP, and you're done.
Okay.
Okay, that was the initial step. It was later that additional factors of KYC kind of came into the picture. So now that worked remarkably well for a Paytm to get 220 million customers in
Right.
a year and things like that. And obviously it was limited. It was limited to the 10,000 rupees or whatever. Now that seemed to work pretty well for KYC with. And the next question asked was, okay, who's going to bear the brunt of loss if there is loss or whatever? And the PPI said that, okay, if that's articulate the question, and maybe we can come up, we can say we'll bear it up to that limit that we set or whatever.
Yeah.
Which is why, the 2,000 rupee limit for certain things.
Yeah.
Right now you have NFC cards. I gave my card yesterday. It was tapped. There was no second factor. Okay, it's NFC. It's wireless. So that part is being covered.
Yeah.
So let me come to you. I know you have a point of view on this.
Yeah. So I'll sort of partially agree and partially disagree with Riju on a few points. Being a lawyer myself, I'm actually giving you industry perspective of the pain points that the industry has felt. I think first of all, the question that we need to ask ourselves is, what are we trying to solve here? What's the problem? The problem is 70 odd years later, today, with all the banks that are there in this country, we still have a large unpenetrated part of the society that needs banking solutions. Disruption is the only way you will be able to achieve that objective if you want to go to that growth level. The only way that can happen is use internet as your friend in that process. Keep the privacy concerns in mind, as my learned friends Smita and Apar have articulated. Privacy is an important issue. But at the same time, don't lose sight of the avowed objective or the goal that you're looking for as a state. And from that point of view, you need to keep coming up with solutions. As Riju mentioned, why Aadhaar? Why just look at Aadhaar? I mean, fact of the matter remains, I think most of us have set up our bank accounts not using Aadhaar, but all other forms of ID proofs. Now, one alternative which Singapore has, I'd like to share that here, is this construct of MyInfo. Basically, I can go online and can upload my ID card, my school certificate, something like a DigiLocker, which is integrated. And now each time once I've uploaded those documents onto that system, now it's purely voluntary consent based. Each time I go to a bank or a financial partner or an insurance company, I don't need to get into KYC all over again. I have to give him consent and I have to say, ICICI Bank, I allow you to use this information lying in this portal for the purposes of opening up the account. What is the point that we're trying to achieve here? We should avoid duplicacy. We should avoid multiple data point checks. Try and use scale. Scale. What is our benefit right now? What is our strength? It's a scale. The way we can build up scale is by actually avoiding these repetitive processes, reducing cost. So something like that. In India, we already have a concept of a central KYC platform, but it's for a very limited objective. Under the Prevention of Money Laundering Act, you have a central KYC, which only government agencies are right now allowed to access. If you were to now enlarge that construct and say that once I or Prashanto has given his ID proofs there, each time a company needs to access that data, with specific consent, he can directly approach the data there. And you can again do some anonymization there. Because it won't have biometrics, some of the concerns around Aadhaar can be addressed. We need to rapidly come up with ways to be able to look at scaling, at the same time ensuring that privacy is preserved. Now, to Riju's point, no matter how pragmatic RBI might have been as a regulator, the reality is today there exist no operative guidelines on how KYC will work. Fact of the matter remains that despite there being an independent regulator for payment and settlements, I don't know how many of you are aware, but RBI's jurisdiction was taken over by the government insofar as payment and settlement systems couple of years back, and it's the government which is the regulator for that. But what has happened is that there are no guidelines at the moment. RBI is following suit from what the government is telling them, and each time the government has a position, they keep, dilly-dallying on their position, and that has a ramification effect. So it is important that the regulator looks at solutions. Look at what happened with localization. RBI issued certain guidelines on localization. This is an area which is even dear to Prashanto's heart. RBI issued certain guidelines and said all fintech companies, all credit card companies from an X particular date need to keep the data in the country. Now, the question was, why do you need to do that? So they said this is because we have supervisory concerns. So all fintech companies went to the RBI and said, well, we'll keep the copy and the mirror of the data in the country if you have supervisory concerns. RBI went along with that idea for the longest time. Just when the guidelines were to become operative and we felt that the RBI will allow mirroring, they said nothing doing because the government told them to do so. Data shall only remain in the country. Now, that has had a huge effect on the digital economy, on the fintech side. Now, what is important, as Apar mentioned, is regulatory certainty. Do not come up with disruptive thought processes without having had proper consultation, having thought through the issue carefully, and then have a solution for it. Central KYC, to my mind, is the only way you will be able to address this malaise of and the problems and the after effects of Aadhaar with the challenges that we are facing at the moment.
Thanks, Vaibhav, and thanks for bringing up localization, which, as you said, is very dear to my heart. Because, you know, what has happened there is very interesting. I mean, we've seen an unusually hard line on this particular and various other surrounding policy statements which have happened. So right now, the status is that it's extreme localization, and it's possible that we will head into a situation where even data processing will not be allowed outside, although technically now the RBI is saying that you can process, but you must delete it immediately. The fintechs are saying, okay, if you have to delete it immediately, then it's not making sense. We may have to process it inside. And the problem is, or not the problem, but the interesting thing is India processes the world's financial data. So if you go to an American on the street, his credit card data is probably being processed in Gurgaon or Bangalore or somewhere. So, you know, we are actually raising a one-way barrier. We are saying it's okay if we are processing your data, but you cannot process our data. So that's particularly interesting. Smita and Apar, I'd like you to just bring up this question of what can work. Okay, what do you think would work? So Vaibhav mentioned the idea of a central KYC thing. You know, do you agree with that as an answer? And taking that forward, Apar, you know, the holy grail of governance on a completely centralized system, centralized in the sense of very omniscient system, which actually then doesn't require any other government documents, at least physical documents, because the government knows who you are and what you're allowed to do and what you're not. Like, you don't need a driving license, okay, because the government knows if you're eligible to drive, and in the database that you've been cleared to drive, so you don't need a physical. What do you see as the problems and challenges with that? Okay, is that really the holy grail we should be looking up? Any of you would like to take it up first, Smita?
So I'm just going to go back to the point on the need for a data protection law, I think, because it's great to hear that there are so many alternatives for Aadhaar, and you know, there's many that were discussed right now by the panelists, but also many that have been proposed. And when you think about these alternatives, so when you think about things like facial recognition technology, or I think there's been proposals for video authentication of ID and things like that. But whatever it is going to have an impact on your privacy, irrespective of I mean, that's not necessarily entirely a bad thing. It's just that what we are asking for is that this impact that it has on your privacy is done within the contours of a data protection law. And, you know, a law that has actually modern data protection principles, that is actually effective and enforceable, as opposed to the rules under the Information Technology Act that we have currently. And I think I would say that should be where we start these conversations. While it is important to have you know, conversations about the way the regulatory system works in terms of fintech and the way the industry works as well, I think that if we start with a good data protection law and then build these systems over that law in compliance with that law, that's the best way forward that we can go. And that's one thing that, I mean, Weber mentioned that we should take care of privacy. And if you look at research on digital ID systems, on the fintech industry, all of the more technical or the more industry-based research will just assume that there is a privacy law, or assume that there are privacy concerns that have been taken care of. But we need to be having I mean, right now in India, we are having some conversation about the privacy impact and how to take care of it. And I think we need to be having more conversations about that. That's what I'd say.
Thanks, Apar. Your thoughts on this, on a very centralized, omniscient, and functioning system. I mean, for example, in the Aadhaar, one of the problems which has been brought up is systemic flaws, technical issues, false positives, false negatives, people being denied their rights, etc., because of wrong identification or misidentification. Let's say we tackle that, and they can solve that, and you have a system which is up to 5 nines gets the identity of the person right, and then everything is linked to that. Is that the holy grail, or are there problems with that?
So the centralization is already a feature of the Aadhaar Act and the regulations made under it, whereby all authentication records are stored for a long period of time. In fact, that's been limited by the Supreme Court's judgment. And what happens is that when we think about a centralized form of ID, we think about the benefits, and a word which is used quite often is frictionless. So I think there should be some friction to our living. I think otherwise we slip and we fall. And I think that's why a driver's ID is a certain level of certainty that you pass a driving license test, that it needs to be renewed, because as you age, you may lose that skill. Your physical fitness is tested. But one singular ID may not perform all the objective functions of the individual identification documents which are relied upon by you. So you need to first state a clear purpose, what the ID is addressing. And if there is a level of exclusion which is happening, and then it will apply very differently for your provision of public sector services, where the argument may be that the state capacity for support for those services is limited, and hence it needs targeted delivery. And you may have a different objective with respect to private IDs, where the private industry may like to use it for eKYC. Of course, I do recognize the challenge. The challenge is how many IDs can be made. But decentralized keychains, as they're called, are one way to look at it as well. There is exciting research which is happening right now, which is being done by not only contractors who are looking at how to operationalize digital ID, but even by non-profits such as Privacy International, who are looking at use cases not only in India, but for instance in Kenya, where they have the M-Pesa platform. But what I would like to go back to again are that there are co-political choices we are making when we take up an ID system. These are choices of civil rights, of what should our country look like, what is the eligibility, does an authentication disentitle you from a government service, and what is the form of policy making we are approaching, which seems to be fairly muscular in its articulation. I think these also go to impact what is the process for articulation of that policy. What are the policy frameworks? Are we going through ordinary courses of legislation where it's debated, it's tested, then passed through legislatures? Or we are relying on ordinances, executive notifications, which lack that level of reflection and insight? And of course, depending on how we bake the cake, it's going to taste either sweet or rotten.
Terrific. A muscular and fairly nationalistic policy-making regime.
I didn't say nationalistic.
You didn't. I'm adding the nationalism. Okay, I'm going to just break for a few questions. Yes, sir. Do we have a mic there?
This whole discussion has begun since data services started on a device. Now, for Rajat and all of us, 2 years back, all of us, 1 billion Indians, were connected on voice. And the concept of that connect was that I could speak to anybody. And you had all these people calling you up, which were pesky for a lot of us, which is one perspective, which is what Apar and Smita are bringing on the table. I don't want this to be misused, right? And you had the DND registry, and very quickly, India, as a country, came up with a place where you could go and register. It was as simple as calling up USSD, etc. And if you didn't want to get the call, very good. Now, let's look at the ground reality. We have India and Bharat at the same time. I've got domestic help. They opened an Airtel wallet. This made, the only ID she has is the Aadhaar card that we got for her, and the same is in Bihar, where she comes from. The fact that they could send money up to a limit of 10,000 worked. Along the DND case, it wasn't that let's stop, nobody will use their telephone till we resolve it. So what I don't understand is how can you stop the wallet and say that that Aadhaar which is being used with which money transfer could have been sent through is now put on hold, and till the policy comes up with this amazing law which will solve everybody's problem, we will not allow you to do it. When in the telecom voice scenario, nothing like that happened. The calls continued. Yes, there were some inconveniences, and finally a DND came through, and 1.1 billion people are registered today, and the ones who want to get the call are availing of the service. The ones who don't, it works. So you have telecom mobile services where people didn't want anybody to call them, and you had people sitting in remote Bihar and other places where they said, please somebody call us, and radio services originated where the service was for free and these guys were listening to it. So what I want both the sides of the panel to say is, why is that same thing? We went through this, right? All of us, 1 billion people. Then why is it that on the data side, the same isn't getting replicable? That as Vaibhav says, let the wallet continue. And at one fine day, when you have your law, at that time we'll link it. But I'm very happy, my maid is very happy to link it to the Aadhaar. So where is the disconnect, and why is this not replicating what we went through in the voice scenario?
So would you like to take that?
Please. So I work with a few internal remittance players. RBI hasn't stopped any remittance. What it has done is put the rails on onboarding of new users, because it's not as simple anymore. You have a biometric device to do so. And so if you look at that specific use case of the maid sending money, chances are this person will go to the business correspondent anyway. And the business correspondent can, at this present point, given RBI's regulations, act as an agent for collecting the KYC documents, which can be your Aadhaar, and it can continue as always. So it's just no impediment at this stage to stop it. But to use that as a reason to allow biometric unabated with business correspondence is dangerous, because you can have the same business correspondent with its biometric device misusing it. And so I don't personally support the use of biometric in that manner, right? On the telecom side, and I actually had the interesting experience of working with all 3 or 4 major telcos, depending on one of them is getting merged. And so basically, the reality was that around October or time frame, they stopped biometric, right? And there was a POC which started. That TRI said you should go ahead and start onboarding. And at that point of time, they started experimenting with different ways to onboard users, because TRI said, well, you can take the OVD, the Aadhaar card or PAN card, whichever is the maid's card, and then you can capture the person's face. And even if you don't do it digitally, have somebody in the back end approve things, and you could activate this person. So if you see the new circular from UIDAI, it says the price of eKYC has become 20 rupees for biometric. You'll be surprised to know that many of the telco providers today don't want to go back to eKYC. They don't need the eKYC anymore, right? So again, I come to this point. Aadhaar is not a mandatory requirement for this kind of digitization. So we do need to look at these use cases and support the wallet transfer remittances. And we can do the KYC properly, but there's no need to have to bring Aadhaar back in the same shape as before for that.
Right. Yeah, I'd just like to add, though, I think, one point I do agree that this abrupt disruption of policy, we saw this happen in the same case that with the KYC, with the aggressive, implementation of a KYC regime where there was minimal KYC, it pretty much disrupted 70-80% of the wallet users. And including people like, if you go to Delhi Hut here, all these small merchants, they were taking Paytm or one of the other wallets, okay, and they were often not registered as a merchant, they were individuals, okay. That completely stopped, and for a long time, over maybe a year or maybe 6 or 7 months, they had stopped taking wallets, and it was back to cash because they were not carrying card machines. So that did happen. Yeah. Do you have a...
Yeah, just to add, I really sort of very strongly agree with you on that point, simply because by the time the maid ascertains the identity of this business correspondent, she would have been swindled away 4 times over, Riju. That's the problem. Technology was enabling efficacy to be able to make sure that things happen quickly and with safety. Now, what's happened is, I'll tell you 2-3 things that have compounded the problem. Aadhaar debate on privacy, combined with the biometrics, really complicated everything. And I fully agree with Riju that Aadhaar is not the only solution to identity. And as long as you take biometrics out of the equation, as Riju rightly pointed it out, then it becomes a lot easier conversation to have with people, as long as there is an informed consent to address the privacy issue. What's also happened is, sir, that there is a mindless application of, thought process around constructs which just flow from somewhere. For instance, where is this prevention of money laundering guidelines coming from? It's in the backdrop of the FATF guidelines, the Financial Action Task Force guidelines. The FATF guidelines don't say that you have to have KYC for all. What they recommend is there has to be a risk-based assessment KYC done. Now, why should there be a KYC done for, say, 50,000 rupee transactions of, say, an individual who's a domestic help, in a similar manner as a high net worth individual who's transacting in millions of dollars and is sending them cross-border? What is happening is you're painting everybody with the same brush. So the same KYC norms are there for banks, for an individual with that level of income and another high net worth individual. So what's happened is you've not thought through money laundering. So the money laundering diktat is do full KYC of every individual. Then you have added the complexity of biometrics with Aadhaar, which then resulted in the kind of judgment that you got. So now the fintech industry is nervous that even though there is an ordinance, we can't use advantage of it, God forbid if that was again to be disbanded. So the alternative would be to come up with friendly ways to do ID verification. The government also needs to come up with some risk-based approach, not have same formula that fits all. And the last sort of point really to sort of consider would be that any identification of an individual can't be his sole sort of theme to link all the benefits that are flowing to him. The problem now is everything is now getting linked to one or the other. The other problem that the government is facing is they've already spent, if I was on government side, the challenge is I've already spent $1 billion doing the Aadhaar project. How do I use it now constructively, taking into account the Supreme Court diktat? Some of the provisions of the ordinance will have to go away. Taking all of that into account in a way that it benefits the economy. And that's where I think the civil society also needs to come forward and offer suggestions that how do we take the privacy issue, use it along with the data that they already have for the benefit of the society.
Thanks. Apar has a quick point to add. I just want to do a time check. We have till 4:30 for this, which is another 10. Is that right? Yeah. Okay. Apar, and then I'll quickly take some questions together. Okay. So what I will do is, just maybe 1 minute each, because we will want some more questions.
Let's get questions in.
Yeah, let's get the questions in, and then we will take it. Okay. Yeah. Okay. Go ahead. Yes, ma'am. Could we? Go ahead. Could we get the mic to her? And I'll just quickly take maybe 3 questions together, and I'll come to you, ma'am.
Sure. My question is to Riju. Riju, you spoke of the zero KYC regime that governed PPIs earlier being something that should have been taken away, and RBI was justified in taking it away. A zero KYC account was for small ticket transactions. It was for very, very micro transfers and micro payments to merchants and P2P transfers. Right. It's also any transaction in a PPI is done after the PPI is loaded through an already KYC'd account. I can load my PPI through a CC/DC net banking channel, which is already KYC'd. The only way in which I can load it without KYC is if I cash load it, which is a very, it's not really a use case. In that context, I already, as a regulator, have an audit trail. This is a KYC'd account, it's loading a PPI. Why then do we need min KYC, which is a CIN number, and full KYC, which is the same level of KYC for a bank account, for a simple P2P transfer of even 5 rupees?
Okay, great point. I just want to take, can I just take 2-3 questions? This lady here, please. And I think a very good point, because all through PPIs, funds in and out are from and to a KYC'd account. That's never changed. Yes, ma'am.
See, I view government to be a custodian of citizens' safety and confidence and welfare. When our people go for eye checkups, normally there is a free eye checkup camp. Now the retinal cameras are being used, which can give inference to many clues to vulnerability to certain diseases, the age that one would live through, and there are many inferences from that retinal camera based information which can exploit a citizen in terms of the insurance policies that can be offered, in terms of the immigrations and visas that can be given, in terms of employment that can be offered worldwide. My submission is, yes, Aadhaar has one vulnerability, but the custodian of data is at one place. At least we can ensure that one-time KYC done based on Aadhaar for government should be adequate. At least they can safely protect that data. But we must explain to the citizens what free checkups where biometric is being given voluntarily by people and they are more vulnerable. Let us do an informed dissemination of vulnerability of all these machines which are making us, more susceptible on many accounts. That's the message you should bring out as an outcome of this deliberation. It's more a comment, and I want your input, Aadhaar versus free will use of these free checkups. How do you bridge a view where government does justice? Aadhaar has a lot of protest, but why not the other means where public is vulnerable?
And is there a third question which we take in the